Welcome to G3 Investors. This is Greg Gallagher, and we're going to take a look at the market through September 11th, 2020. Okay, here's a chart of the S&P 500, the SPX, and it's a year-to-date chart. This dotted line right here is where I think there's substantial support, and given this run up here, so this looks like the bulls were trapped up in here. Anybody that entered up in here is probably feeling trapped right now, especially if this goes lower. The first point of interest here was the gap down at the beginning of the March correction, which happened in late February, and the high of that bar is 3260, and so I draw the line right above that bar, actually right at the top of the high after this big move down. Made a high before we made this high, and of course this high is a new all-time high, but this high of this bar right here was 3279, and then it's hard to see right there, but there's a little gap up there, and the high of that bar was 3272. Now this blue line here represents the 50-day, which I didn't draw in here because it kind of went around all these ones and twos, and I wanted to make that clear. But we had an all-time high up here of 3588, and then we pulled back the blue line, the 50 days, right at 3322, and we pulled right down on top of that, and so it held the 50-day. So it's an uncertainty. We don't know where it's going to go. It could go up here. It could go somewhere else. But let's take a look at a little bit of longer term view. This is a 2-year chart. This time I have the 50-day on here with the 200-day. It's the S&P 500 index, and the 50 days, this blue line here. And you can see, let me draw here a little bit with the highlighter. You can see this topping pattern where we correct. Okay, and then we had this correction down, and when we made a new high here, okay, we went up, and the bulls got trapped again. Went another correction, made another new high here, correction. Okay, new high here, correction, big correction. Even right here, we got another correction after we made a new move up. We had this, and then we made a new move up, and then we corrected again. And here we are again. We're doing the same thing again, correcting again. So, are we going to go lower? Nobody knows, but looks like there's a 50% chance. So we shall see. I'm going to get rid of that. Mess that up. Let's go to a 1-year chart here, and let's see what is holding up. Now, I follow 24 ETFs, and I looked at all of them. There's a few, like XLI, and you can see XLI is holding up pretty good. It's quite a bit above its 50-day moving average, whereas the S&P is right on it. If we look at the Qs, which is the technology sector that's been leading the market for a long time, it's right, I think it closed right below its 50-day moving average. So even this, again, that looks to me like a bear trap or a bull market trap or whatever. The bulls are trapped up here. Let's look at XLY, consumer discretionary. Again, that's holding up nicely. Made new all-time highs, and it's holding up nicely. XLB is materials. Whoops, thought I had this here. Whoa, what did I do here? Sorry. Yeah, it's holding up pretty nice. That's holding up really nice. As a matter of fact, I think if it gets back up to 66 here, we would enter in on that one. Right now we're 100. And then I always like to look at the transports, and that's holding up really well too. I don't want IYT. Holding up very nicely. This is just a real small pullback here, and we'd get it. We're about to get into that one, probably on Monday. You know, if the given whatever the market does. Okay. Now, I've been accused of being an LA wave theorist, and I'm not, but I thought I'd go ahead and try to apply the Elliott wave theory to the S&P 500. And the move we've made from 2009 has been a bull market. And so if I understand a theory, you would go from this bottom to this top, and then you'd have a correction. And then from point 2 to point 3 would be your second wave up, and finally your third big wave, because you have a correction from 3 to 4 and then back up. Problem is, this wave is too long. As I understand it, the second wave is supposed to be almost twice as long. Well, it's twice as long here. So, and I'm not sure how Elliott wave handles this, because this megaphone that's happening in just doesn't look normal, if you ask me. Well, that's all I really wanted to cover today. Do a little bit of advertising here. Here's our results through September 11th. We're up 79%, almost 80%. You become a patron, $20 a month. Get access to videos like this, the setups that I see daily, and I make comments and updates on the market throughout the day. You copy this link into your browser. Don't forget to like, subscribe, and share on YouTube. It's Greg Gallagher with G3 Investors. Good luck and good trading.